All right, hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 9th. Good to be with you guys this morning. Kyle, Kelly, Jay Jackson's in the house. Permendra, good morning to you as well. William, Tuttle, Depeche. Can't get through all the names, but good morning to everyone in the room. So, lots to talk about. We've seen a lot of price action develop since yesterday's interesting day here in New York. Let me tell you, it's the first time I've seen that happen all my years, with the markets shutting down for 3.5 hours almost on some technical glitch. Look, at the end of the day, none of the price action that we saw was really relevant to that mishap here at the NYSE. So it was interesting. And overnight, we did see a little bit of a rebound in Shanghai markets, and we'll go over that as well. Kelly says, good morning. Let's have a great session, pal. Let's do it. All right, let's jump right in. So before we get started, here's the dollar index. You saw an overnight. We came right for a perfect tag of the lower median line parallel here before seeing a little bit of a rebound. Trade still remains at risk. If you looked at yesterday's intraday page, one of the radar charts was the updated 30-minute on the dollar index. Again, we like to use this as a reference. It has seen a break of this on the near-term chart. And it looks like it did travel a little bit outside of it, but we're not getting much follow-through. So here's the 30-minute looks like on the updated chart. Okay, and you can see we've sort of muttered out of it, tested it as resistance, broke through. So I'm kind of taking a little bit more of a neutral tone here on the dollar index for now. Still think it's at risk, but the momentum signature is hold 40-60, 40-60. And again, with the divergence that you're seeing in price, so here's what the relative performance looks like on the greenback so far. Not too surprising to see this back and forth action, right? So you're seeing that the CAD with a move here, 0.56%, currently holding a position on the dollar CAD right now. So we'll look at that. Sorry about that. And we'll continue to watch this for a possible break below 11,935, 11,924. That's really the level that'll put this thing back on the short with a little bit more conviction. You saw a really nice pivot catching last week's highs, the opening range low for the market. It's also a nice confluence of Fibonacci levels. And a break below that really solidifies a little bit more of a key reversal in the dollar index. But as it stands right now, we're still in the confines of this formation. We'll continue to watch that near-term support, raise that up, bullish invalidation level to that key level we just noted. Okay, so again, as a reference, something to keep in mind on the dollar index. It's getting a little dodgy here, so we're going to continue to eye this out, but nonetheless, still holding support. All right, so I want to go over the intraday charts first because those are sort of on the move right now, and I want to kind of keep price action pertinent. So let's jump right into the intraday update from yesterday. And I guess let's leave the most pertinent thing. I actually just got taken out on that dollar CAD at target. So I guess we should just go over that first. Here's what dollar CAD looks like on the daily. Okay, and the major level or the reasoning, I'll say, behind yesterday's report or yesterday's idea of trying to take the short side of the trade was just based on that key resistance that we just came into. Okay, 127.70 on the intraday chart, a near-term 1618 extended that into 127.80. You saw that spike catch that a few days ago on the open right into that high. You had the median line just above it. More importantly, guys, remember, nothing supersedes basic support and resistance. And you do have a trendline resistance here that dates back to 2012. Caught the exact high almost here in March, and right now it's right in the same region. Okay, so we were looking lower. The daily chart, right, is suggesting that we want to look for resistance here. On the intraday, you still needed a couple of indications to put you there, and here's what the 30-minute looked like last night. Okay, it was sort of making consolidation here, a triangle pattern, whatever you want to call it. And the bearish invalidation level for the scalp bias was that same region of resistance that we highlighted on the daily chart, 127.70, 127.80. As long as you held below that, you're looking for short triggers in momentum. Here's the 5-minute chart, or the 30-minute chart looks like now, and then we'll jump into the 5. So I just got taken out for the rest of the trade here at target. We did book 39 pips earlier today, just ahead of the webinar here. Looked like we were putting in some divergence, so I wanted to lighten the load a little bit, but the last limit that I put in last night just got taken out. So you're basically looking at the trend line support or median line support from the formation off the lows that you made here in June. Again, a near-term pivot. This is going to be interpreted as the opening range high for the week that we broke here, giving us that topside bias into key resistance. And this is going to be the near-term validation for the turn here in dollar CAD. So if we break lower below 126.66, you're basically looking for a basic 236, 26.24. Matches up pretty nicely with last week's highs. A little bit more of a critical region comes in at 125.30, and that confluences with the former upper median line parallel of another formation that we were following for a few weeks. So that would take you right. Oops. Sorry about that. That would take you right into this region right here. All right, so here's what the 5-minute chart looks like, and I kind of walk you through. We were most operative, or I was most operative on this and the sterling, believe it or not. And I'm kind of kicking myself there. I got stopped out at break even, and I'll show you that in a moment. But here's what the 5-minute chart looks like on the dollar CAD. So it was a snooze fest, and we kind of sat in this for a while. A lot of this came out, or the entry of this was last night, right on the back of the close of U.S. trade, right ahead of the close of U.S. trade. The FOMC minutes. I just want to take a moment and talk about that real quick. Excuse me, guys. Depeche says, are there multiple entries to look out for? Hey, Mike, 101 question. But how do you know when to time your entry on the 5-minute chart? Depeche, I'm not sure I understand your question, brother. Actually, the 5-minute chart is where we enter all the trades. I'm always looking at the 5-minute chart for entry. The 30-minute chart is a guide. Okay, those are the levels that we'll actually be looking to trade on a day-to-day basis intraday, right? But when we're actually pressing the short, pressing the long, closing the positions, we're mostly exclusively looking at a 5-minute chart. So I'll take a look at sterling CAD, remind me in a couple of minutes. But on this trade, there wasn't very much compelling trigger here. I'm not going to lie to you guys. I kind of front-run the trigger on this one just on the back of the release of the FOMC minutes. And again, I don't want to spend too much time on that. You know we're not heavy on fundies, guys, but there was quite an interesting tone. And I only pick on the guys that, we had lots of arguments with over, is the Fed going to raise rates this year, or is the Fed not going to raise rates this year? And you guys know I'm of the mindset that we're probably not going to see a hike this year. Long story short, the minutes came out with a couple of different interesting points. The most takeaway, or the most important takeaway, is this. They noted that they're concerned about Greece not reaching a deal. That's not something that we've heard too often from the board. We've heard them now comment about the slowdown in China. And certainly if you look at the Shanghai composite, guys, here's the Shanghai composite. What can I tell you? We're 34% off of the highs at this point. 34%. Okay, almost 35% on that rebound into the lows we have. And again, we actually just caught the 200-day moving average on this rebound that we're seeing here today. Still wouldn't put it past this thing to see more losses. It doesn't seem like some of the programs that they're putting in are having the lasting effect that the PBOC would like. And it's warranted for the Fed to be able to, or to cite this as a concern for the macro picture, right? So you got the concerns that's going on in China. You got them talking about what's going on in Greece, and you got them talking about they want a little bit more stability in the greenback. Obviously, if the dollar continues to rise, that continues to weigh on corporate earnings and slows down their bid for inflation. Remember, the Fed's dual mandate, fostering maximum employment and price stability, i.e. inflation. Well, the employment picture is almost there on a percentage basis. Obviously, we saw that the last NFP report showed an extremely poor labor force participation number, which has dropped now to the lowest level since 1978. So we'll put that on the sidebar here, okay, because the broader unemployment rate is broadly where they want it. That being said, the inflation picture is still going to be the laggard here. And if the dollar continues to increase, it's only going to make the inflation harder to stoke. So it becomes extremely difficult from just a logical perspective to try to see the Fed move on interest rates with all of this drama going on, not only in the macro picture, but also with the strength in the dollar. A hike in rates is only going to fuel further strength in the dollar. So on that basis, and that's all I'll say on the Fed minutes. If you have any questions, feel free. On that basis, I was expecting to see some dollar weakness. This pair is at resistance. We talked about the daily chart again. Remember, 127.80, 127.70. You had a really good risk reward. I actually only had to stop. Literally, it was only about a 15 pip stop just above the last swing high here, and we let it go. And I kind of just didn't look at it until we opened up Tokyo. Tokyo saw a break of the opening range low. Okay. I kind of let this one sit. We left the stop at break even. Woke up this morning. We saw some divergence here, very minor. Again, I didn't wait for that candle close, so I kind of scared myself out a little bit. Took 34 pips there. The limit was right at this. The limits for me, by the way, guys, are always on the inside. So if there's a level cited at 126.66, my limit is probably at 126, 73. On this one, the limit was 126.70, literally. So we're out of dollar CAD. Where do we go from here? Okay. Kyle says, loving your new mic. It's perfect. Well, actually, Kyle, this is the home office today, so we never have a problem with this mic. It's only in the other office, and we actually have that a new mic there, so thanks for noticing, Kyle. But where do we go from here is the question. Mike, that's a great trade. Cool. What's up now? So at this point, you're looking for some sort of inflection on this range. If the U.S. opening range shows us a defensiveness and a rebound, I'm still not really looking to take long exposure, guys. The only thing that would put me in a long exposure type of mentality on dollar CAD would either be a break lower towards 125.60, this region that we highlighted earlier, the opening range low for the week, and this gray line here actually represents the 2015 high day close. You'd expect to find some support there. Or a concerted break above 127.80. And at that point, I still wouldn't buy the breakout. I would look to buy the pullback. So that's where we are right now with positioning on dollar CAD. You're either looking for a break here, and at that point, you're looking to sell rallies towards 125.60, or if this holds on a rebound here, again, I'm not really looking to take any long exposure on a trade like this where you're eyeing down major key resistance and a multi-year trendline resistance for dollar CAD. So we're not necessarily calling a broader reversal trade here on the dollar CAD, guys, but near term, you're at risk for a deeper correction here. And again, be looking for that 25.60 level as a target for possible re-entry on the long side. Okay. Actually, over the next few days, you do have a confluence here with the current operative formation that we're in and the former parallel off the lows, and that again coincides at 125.60. So any way you slice it, it's a pretty critical region down there. From the 5-minute chart, let's see if there's anything on tap here. If any of you are still holding shorts, that would be a momentum trigger that would definitely warrant exiting the trade. At this point, now you've made real divergence. So the divergence I was looking at earlier in the session, maybe a little bit of seeing what you want to see type deal, but here's some real divergence. Price action making a lower low, oscillator not confirming the low. If you do see a trigger break, expect a near-term pull higher, but I would still be looking to short while below 127.70, 127.80. Any questions on dollar CAD before we move on? Okay. Moving right along. So dollar CAD, again, in our sights, still one of my favorite setups at this point. If you remember yesterday in the webinar, we talked about it. I was in a short on this. We did take initial profit, but then we got stopped out at break even on that pullback. So gave it another shot. I want to jump into the pound, and then Deepesh, we'll take a look at pound CAD since we've covered both of those component currencies. But here's what the pound looked like yesterday. Excuse me. So the premise of this trade, I don't want to get too much in detail because I think we covered this pretty rock solid yesterday. 154.60 was the level to break to really validate the trend line break off the yearly low. Here's the pound look like on the daily. We soared right through it. A 786 retracement from the advance off the July low, or the June low, excuse me, caught the almost to the low tick here. The actual low for the session was 53.29. Okay, so we probed just below it. And you're seeing a slight rebound here. Look, at the end of the day, we broke a major key level. And I don't want to necessarily say that we're looking to continue to press the sterling lower, but it's still at risk for further pullback. As a disclaimer, I was on the long side of this again last night. And if you guys want to see something funny, I'll show you the 5-minute chart, because not only was we long at a great rate, yet again on this one, it got stopped out at break even. I actually did take a stop on this one. I took a 15 pip stop trying to go long earlier in this session, so I just wasn't willing to take a loss. And as soon as we saw a 15 pip gain, I brought it to stop to break even. Playing it too close to the chest, guys, can be also a detriment. And I've showed you over the last couple of days a couple of scalps of mine which would have worked out ideally, but because, again, trying to play it too close to the chest, you can do yourself a disservice, and we did that again here on the sterling. So try to learn from these mistakes. Again, as long as it's not a loss, we're not going to worry about it too much, but inevitably, obviously, on the pound, we're looking for about 30 pips per scalp. You would have gotten well above the profit targets on the scalp here off the low on this rally. For the pound, the major level of support that you came into here, and why we were on the long side. Remember, this is the bearish invalidation level. Below this, you're still looking for short triggers, just to be clear across the board here, guys. But these confluence regions of Fibonacci levels, as those of you who have been trading with me for a while know, are sort of my bread and butter. Okay, 1618 extension off the high came in at 153.40. A 786 retracement off the low came in at 53.34, and that's pretty much where this thing bottomed, right? On a closed basis, even on a 30-minute chart, that's exactly where you found support. Now, on the decline into that level, check out the divergence, right? That's serious divergence. And remember, I don't like when both signals are below 30 or above 70, but when one of the reference signals is above the extreme or below the extreme and the other one's on the inside, those tend to be even stronger signals. So again, divergence into a trigger break. Wasn't the prettiest trigger break by any means, but 9 times out of 10, again, I'll take. Very healthy, good risk to reward. Would have panned out greatly. Again, I played a little too close to the chest on that one, but I just wasn't willing to eat 2 stops on this setup. So at this point, looks like we just missed another trigger right here. Just ahead of the open of the webinar. Okay, a 60 hold in momentum on the 5-minute chart. 3-point trigger touch. Really good risk to reward. Entry would have been somewhere near 54. Stop would have been right around 54.20. You're looking for 30 pips. You're on your way there already. You already gotten that. So watch the lows for Europe, Watch that major key support. I wouldn't be looking to initiate any new fresh shorts into this region, okay, barring the one that we just missed. That would have been a great position. But nonetheless, at this point, I wouldn't be looking to enter anything new until either we break below this or if you get another opportunity to rally into that major key confluence. And again, we've added some parallels here. This is actually not a pitchfork. This is basic trendline resistance, guys, taking off the high. Taking a parallel to the low here, caught those pivots really nice. Taking a parallel to the low here, caught those pivots really nice. And that's near term the invalidation level for the bearish trade. A topside break there, and you look to play into this region. Okay? So the pound's still at risk here for a move lower while below. Essentially 154.60 is going to be the break point that puts you back on the constructive path. Any questions on the British pound before we move off? A little bit of a different scenario from dollar CAD because British pound is not really eyeing that major critical resistance that dollar CAD is, right? And in fact, the sterling position was half of the position that I took on the dollar CAD just because of the relative, what's the point I'm trying to make? The relative positioning of where it is in the trade. Does that make sense, guys? We need to be dynamic with which trades you're pressing. So which trades you're actually giving a little bit more leverage on, and which trades you're being a little bit more nimble on. So I hope that offers some clarity on that. All right. Moving right down the list here. So we went over the dollar CAD and the sterling dollar. Top of the list was the dollar yen. And I know that swing trades are still in this as well. Listen, there was a great opportunity for the long dollar CAD and overnight trade. And again, that panned out exceptionally well. So here's what dollar CAD looked like yesterday. We're still in the confines of this broader descending formation. Let me bring it up here too. Okay, and the premise here was, again, momentum was coming into a major low. Price action was coming into a major confluence. You had the lower median line parallel. You had the 786 retracement. Okay, and then you had a topside trigger that gave out yesterday in U.S. trade, shifting the focus higher. So you're basically looking for a rebound, but the broader picture stays bearish below 121.56, 121.60, this region here, which is the median line and the 618 off the highs. Here's the rally and overnight trade. If you missed the initial trigger, there was another trigger with the 50 break in momentum that actually proved or pushed it even further right into that major highlighted region. Remember the lows for the opening range of the week. And at this point, we're looking for short triggers again. Okay? Technically, this was a short trigger, but the decline didn't give us a break in any range, not an opening range low or any type of support level, so it's not an operative trigger. At this point, let's see if there's any divergence. It might be really slight. Really slight divergence. Okay? Price action on a closed basis, slightly higher high. The oscillator, slightly lower high. Okay? Let's see if there's any compelling triggers on the 5-minute chart. So you also have momentum divergence here on the 5-minute chart as well. But I don't really see a compelling support trigger. So it doesn't look like there's any of these compelling support triggers here, but I do like actually a possible push off this region. We'll see if there is an opening range setup here for New York. If this kind of range is below this resistance, a stop just above, trying to press a short might be the play. I'm a little reluctant to do that today because you're seeing the dollar a little bit stronger here versus the yen. Obviously, the recovery that you saw in Asia with the Shanghai coming back. Even if you look at broader risk appetite today, it looks like you're seeing a nice little snapback. So here's what the equity market looks like so far today. Remember, the yen strength is a predicate of the risk sell-off market. It's the typical play. So I'm a little bit reluctant to press the short here. I want to see a little bit more of a technical play. But here's the CAC 40 up 2.4%, DAX up 2%, FTSE 100 up 1.43. You had the Hang Seng overnight up 3.73. In fact, if you look at the Asia market, you can see that the Shanghai Composite actually bounced back 5.76% last night. So, whether that's the government coming in with some sort of radical new thing they haven't said, or whether that's, their implementation of those supportive mechanisms starting to kick in, irrespective, you're seeing a little bit of a snapback here in risk. So we'll watch dollar CAD, or dollar yen rather, with great interest for short exposure below this region. If this does break 122, 122.34, 122.40 region right here, the broader bullish continuation is up here. Okay, so for the trade to actually be back on the constructive side, back on the long basis, which again, the longer term position here is still going to be constructive, that's the level you would need to be. So also note here on the daily chart that momentum did find some support at 40. Okay, so worth a bounce, trigger break, and a move through this region shifts your focus back to the upper median line parallel. Barring that, you're looking for resistance right back up here. All right. Any questions on dollar yen? Again, the play was on the long side and overnight, but at this point, You want to be watching that resistance at 121.50. Last but not least, and then we'll jump into all of your questions. I see some great questions panning out here. Last but not least is the Aussie Kiwi. This one was awesome yesterday. I'm flat on it now, but what a play. So, excuse me, the break of this major key region. I think we covered this pretty well yesterday in the webinar. Saw a drop right into the median line parallel. We added this in the webinar yesterday. You got another opportunity to short this on the 5-minute when it rallied back in U.S. trade, and then the U.S. opening range broke to the downside into that 110.30 level. Remember, 110.30 was just a level that we had mapped out as a soft pivot of this key support line that dates back to the May lows, and that's exactly where we found some support and found a rebound. So the bearish bias remains intact below 130, 111.36, 111.40. You need to break above 111.77 here to get, to get back on the constructive side. But still looks pretty poised and ready to go for further pushes down while below this region. So I'll be looking to sell rallies on the rally and overnight. Momentum failed at 60, again below 50. So we'll be looking for short triggers in Aussie Key. A little bit tighter of an ATR with about 25 pips, but the levels have been working out really well. Here's what it looks like on the 5-minute charts. I'm not even sure if I have it on this Aussie Key. Oops. I don't have that template on this computer. In any event, let's see. Okay, so you're getting some divergence along the lows here. Not a reason to operate on anything, but not giving us much of a support trigger. So I'll just put this here while we're in the webinar and see if we can just kind of eye that out and see if it does anything for us. But we'll need a little bit more conviction heading into U.S. trade to get back on the short side. Honestly, you'd want to rally at least into 109.20 to be able to have a conviction stop against the highs here moving into the lows. Other than that, you're kind of sitting mid-range, so we'll want to see a little bit more of a conviction move here before getting involved in this one. Kyle says, Mike, do you use price alerts to alert you when key level is reached? Sometimes, Kyle, not really very often. Honestly, I'm in front of the computer all day long, so I'm pretty close to price, as close as I can be throughout the course of the day. So I don't really need price alerts, but I definitely would encourage you to do something like that. Yeah, if you want to kind of get a heads up, hey, this is coming to a level that we discussed earlier today or something like that. There's price alerts all across the boards you can find, guys. There's even price alerts on a website called alertfx.com. A good friend of mine actually runs that website, and his service allows you not only to find price alerts via email, but via text, via SMS, and even have crossover indicators. So if RSI crosses this threshold, give me a heads up. So definitely price alerts are a good idea for people who are trying to trade intraday to bring your attention to them when you want to be, in front of your platform. So that is the Aussie Key. Again, another nice setup here. Haven't really gotten involved in this one over the last 24 hours, but we'll be looking to see if we see that continuation. A downside break, again, looks for 109.96, which is an exact 100 off the high. And below that, there's really nothing until 109. It's about a 100 pip drop. So certainly Aussie Kiwi flirting with a much stronger break here if we do move lower below this 110.30 level, 110.25 level. All right. Kyle says, thanks for that info. Hey, you're more than welcome. So let's move into the Q&A section. Throw out your questions, your trade setups. First up was Depeche wanted to look at Sterling CAD. So let's go ahead and take a look at that. So here's the chart that we highlighted yesterday on the radar charts. And I'm assuming that's why you asked about this one, Dipesh. And basically, the major thing we wanted to highlight here was that major key support that we're trying to press through right now. Basically, you're looking at the February high, 95.55, but more importantly, it also coincided dead on with the weekly opening range low, the initial weekly opening range low. We probed through yesterday, but closed well above it, and median line parallel off the lows. Okay, so if we close below this today, you have divergence in momentum. You have a trigger break that's given out. You look for a little bit more of a steeper correction here in Sterling CAD. Here's the Sterling CAD scalp looks like. It's a little messy, so I didn't include this one because it's not something I've been operative on. But there's that trendline support. There's those highs. This is basically the region that we're highlighting on the daily chart. Let me clean this up real quick. At this point, a couple of retracements will do us some justice here. First of all, just a basic retracement off the low. Come on. Okay. And that puts a 236 at 193.86. And then another retracement I want to take is off of this last extension leg here from the June low. So this retracement actually is going to cover the entire June range. Just want to see if there's any overlap here. 236 comes in. I'm pointing with my finger. 236 comes in right here, guys, with the highs from earlier in the year that we highlighted there. Oops. And that 38.2 comes in ahead at 194.20. Okay, I'm not going to worry about that. Yeah, so these are the levels I'd be working with for now. Maybe a soft target here at that pivot. At that pivot low at 94.40. Also caught that last swing high here in early June. So those are the levels I'd be working with on this one, Deepesh. Do you have any specific questions on the Sterling CAD? I'm not going to touch this until we see today's close because this could be the biggest fake out on a really strong rebound here. Remember, dollar CAD's at support, right? So I don't want to make any assumptions for further CAD strength unless there's something justifying such a move from the technical standpoint. Deepesh saying we are seeing resistance on the 30-minute guide to enter short sub one. Okay, that's for dollar CAD, right? Oh, Deepesh, I missed that second comment of yours. Sterling yen, Kiwi dollar. Okay. All right, gotcha. We'll take a look at that. Any questions on this chart from yesterday, guys? I just wanted to highlight that major key support because this could be a nice move if it does give out. A nice move for, a couple of hundred pips drop here back into the 2009, 2015 high day close. Post high day, obviously, we've made a new high. And there's a nice confluence region down here. If we do see, or if that break does materialize, that coincides pretty nicely with that swing low. And like I said, a host of technical factors. So on the radar, rightfully so, on the radar charts, but not necessarily a play that's primed for pump right now. Okay, sterling yen. I do want to go over sterling yen. What an interesting pair. Oops, did not mean to do that. Here's sterling yen. So a little interruption here at the 50% retracement. You saw the S1, S2 pivot, which again, I'm not too big on pivots, but in general, nice region of support. And this is the yearly open, basically. We popped right back through it. So you look for near-term resistance, near-term at okay, let's bring this into the intraday chart. Sterling yen. Ooh, okay. And I'm just going to go off the cuff right here, guys. I actually haven't checked this out yet today, so just give me a moment. Okay, so I'm going to tack on that same retracement that we looked at on the daily chart. And again, most of these retracements that I add on really prematurely, guys, you'll see me add them on in gray. If the retracement's in gray, it just means that it's a fresh retracement, it's brand new. I don't have enough validation to necessarily stress that yet, right? Yeah, we've made a low here, but you could have tacked on a retracement here, which we did, and then once you broke that low, it's invalidated. So tentatively, you're looking at 87.56, 87.78 as near-term resistance. It just so happens to coincide pretty nice with that trend line pivot that we've been looking at right there off of last week's lows. But I still think you look lower here in sterling yen. I still think you look lower. And specifically, you look lower below this region, 187.80 or so. Momentum still holding 60, so you want to use some caution there. There was some really strong divergence into lows followed by a trigger break. Obviously, was looking at this not too long ago. So really strong divergence followed by trigger break. That was, an ideal. That was a Goldilocks entry right there. Looking for about 45 pips per scalp. So your stop was well in play. Really good risk to reward. At that point you're well beyond your 45 pip limit. But broadly, still liking this lower. I do think that for the sterling yen, broadly speaking, you do look for a drop into that 182.90, basically 183. Depending on where you are, that slope is going to change. I'm going to play devil's advocate here for a second, Depeche. And I don't want to shake you guys out of this or anything, but one other thing I want to note is, watch this, man. That's the deepest penetration in RSI we got sub 40 so far since January. And although, that low ended up being, a more concrete low for price, it's something I do want to pay attention to. The broader trend remains weighted to the upside on this, just like it does on dollar CAD, right? All you're doing is playing the correction here. It's this level or a break below this median line, which would, in my mind, solidify a more broader turn, possibly in sterling yen. Not the base case scenario, but that's what it would take to invalidate the broader upside bias. Okay, remember on this one specifically, the fundamentals will play a larger role as we get deeper into the year because they're probably one of the largest divergences in monetary policy between the BOE and the BOJ. You could say the same thing about the Fed, but after yesterday, where they softened that expectation for normalization, I still think that the BOE is pretty well poised. Even along the same lines of the Fed. So long story short, I like the broader upside picture. Near term, again, I don't necessarily have a scalp in play for you on this one, Depeche. Those are the levels I'd be looking at, but I'd be looking for short exposure. I'd be looking for short triggers up near here. If that breaks 189, opening range low for the week, 38.2 retracement of the decline, might be another area of interest. But at that point, the price is starting to rally and come off the lows with such fervor. I'm not necessarily. This would be the validation to press the longs again. So we'll see. Look for near-term resistance near 187.80. Depeche says, "Nice, thanks, man. Anytime, my man." All right, Manuel. I hope you caught that. Could you check sterling CAD? I hope you caught that earlier in the session. Let me know if you have any other specific questions on that. Kiwi Dollar, how could we forget about the good old Kiwi? So, I don't know, guys. I don't know what to do with this thing. I finally wanted to see this thing rebound. Yesterday wasn't an outside reversal day, but it was a reversal day, and it did start to come, towards a level of which we would start to look higher, and that's basically the median line here off the highs. Break above this, and you would looking for key resistance again, key support, which took us a week to break, test, and move off, will be the next area of resistance if we break this high here. And again, that comes in line perfectly with the upper median line parallel. So this is the breakout play for the upside. This is the zone that you need to clear. Momentum on the daily basis. You'll want to see today's close. It's peaking for a break there. But be nimble. I know any long exposure, if you're trying to play the scalp here, even from a scalp basis on the Kiwi, it's been a slow burner, but here's what the 30-minute looks like. Let me zoom out real quick. Snap these lines. There we go. So earlier in the week when we talked about this, we had highlighted this region. Same sort of region. It just gets extended at this point. That's basically just a pivot 67.70 or so. 2618 extension off the high. But basically, this is the break region that you would look for to get the breakout type of play here. Objectively speaking, guys, it does look like we've made a break of the weekly opening range. So if this is the weekly opening range high, okay, you made a new low, you tested the low it held, you tested the high it held, heading into yesterday's U.S. trade session, that was the break of the U.S. opening range high. Came back, testing the lows, holding, testing that lows, holding, and as long as you hold above that, broadly speaking, you would be looking higher, but it just so happens you're at resistance. So I was looking at this earlier. I don't know what to do with it. I mean, if it breaks from this region, cool, you look to buy pullbacks, but even then, your risk to reward is so skewed. I mean, the ATR has been contracting on this for days. 20 pips is really tight for me to try to intraday scalp. So Depeche, again on this one, I think we need to be patient. You know, part of trading is knowing where you want to focus your attention and energy, and part of it's knowing when to sit on the sidelines and maintain more of a fixed eye lens on it. So when the trade does reach a very appealing area, you know, at that point we can operate there. But as it stands right now for the Kiwi, it's sort of playing with fire. And not only that, it's got such a small ATR that if it does go against you, it's like death by 1,000 paper cuts. You know what I mean? It's a very slow, drawn-out demise. So I'll look for a little bit more conviction of a broader turnaround here on Kiwi. I've been talking about this with Jamie, and you know, I'm just not going to get caught trying to call a low on this again. It says, thanks, man. You've added a new perspective for me. Cheers. Hey, it's my pleasure, Depeche. And again, I love the pairs that you're throwing out, and the ideas are definitely there, but we just need to kind of keep our gears on what's operative right now. So, yeah, if this breaks out from here and shows us a decent pullback maybe into Friday, probably into the Sunday Open, it might be a nice trade heading into next week. But, you know, until we get the conviction trigger break in momentum, until we get the breakthrough, the median line, you're basically just looking lower. And at this point on a trade like this, I wouldn't even be interested in the short. I wouldn't even be interested in the short. Why? Because even the near-term momentum signature is getting all jacked up. So here's, you know, late June, resistance at 60, breaks up 40. Resistance at 60, breaks up 30. It's pretty strong downtrend still, right? So here's the first overbought signal that we've seen since, since early June. Okay? And that break into overbought did foreshadow a nice correction to the upside before the continuation lower. So that could be similar to what we're seeing now. I don't know. All I know is that we're right at resistance, and I definitely don't want to be buying at the weekly high at resistance. At the same time, for a pullback, you know, I'd want to find some support here in momentum at 40 to suggest that at least near term, the momentum signature is starting to turn. Until then, you know, I'm just gonna let this one pan out. So that is Kiwi Dollar. I do want to take a moment and go over some of the indices that were also highlighted on the radar charts yesterday, namely the SPX and the DAX, specifically as we head to the U.S. Open here. Here's what the SPX looks like, rather. And the SPX is a jack and knife game, back and forth, okay? But the levels have been pretty cool. So we're still within the confines of this descending pitchfork formation. This is sort of a major region of support I was looking for. Let me get you the brought out version here for the SPX. And we've come into it a couple of times at this point. We've sailed right through it for the last 4 days. Okay? If you look at intraday price action, we've paused there every time before breaking. But you're basically looking at the median line. You're looking at the 200-day moving average. Looking at a 50% retracement of the entire 2015 range. And just below that, on the extremes, you have the median line for the upper for resistance, and you have the lower median line for support, which coincides nicely with these 618s here. A 618 off the high and a 618 of the yearly range. The lower median line parallels through there as well. My point being, guys, it's very clear as far as what levels we need to be looking for. If the SPX breaks sub 2037, sayonara. Look for 2012. I'd be looking even lower than that if that does break. Near-term resistance, on a closed basis, we probe through it just a tad here, but it's basically the median line off the highs. And what we would need to get back on the constructive side, very simple, a break of the monthly opening range high, 2088. So as you're in this level, keep that in mind. Every time you see it come into support and this thing rallies, everyone starts jumping on the long saying, wow, the best buy opportunity ever, yada, yada, yada. And then the next day we go and we revisit the same support level. So we've tested this region now 4 days in a row. So it really adds validity to watching for a break of that range. DAX has got a very similar range set up in play, in that a little bit even cleaner, because the opening range for the first day of trade for July has essentially all we mapped out, and we've been playing within those levels ever since. So the opening range high for July comes in at 11,286. The initial open low, just below where we actually opened the month, was right what we're testing right now. You have a confluence median line right there as well. A topside break, you're basically looking for a recovery right back into the highs. More importantly, on a downside break, if things get messy, if the Greek drama continues into the weekend, obviously Sunday is the new quote-unquote deadline. Every week we're going to get a new deadline, guys. So keep your eyes tuned, keep your ears tuned for the latest drama report. But if that were to happen, you were to see the break sub 10,646 here, this 618 that we caught the low perfectly to the pip yesterday. It's also the 200-day moving average. So that scenario would look for a run into these key structures, this median line off the low from 2011, and a sliding parallel from that same slope gives you a confluence region right around that 50% retracement. Also, one thing I do want to note, we were looking at this, I think, yesterday. Momentum, still holding 50 support. We saw that trigger break, but still holding 50 support. So if we make it back above that trigger and we break back through here, that's actually a bullish signal. Okay, so keep that in mind. You're sitting mid-range. You're essentially almost virtually unchanged on the month for the DAX, despite all the volatility that you've seen. And, heading into the weekend with all the event risk, you're going to want to keep an eye on these levels. They've been acting very nice, but make sure we're respecting the close here. All right, Alan, welcome, says, hi, Mike. I've only been in the group for a few weeks, so forgive the basic question. No such thing, Alan. No, there's no taboo. Feel free. It says, when you're scalping, do you ever have more than one scalp open at a time? For me, FOMO can cause a lot of charts to be open at once, so I'm trying to stick to one pair to scalp if one exists during the day. But, man, it's hard not to jump on something that looks probable. Alan, first of all, welcome again to the room. It's great to see you here. FOMO, for those of you who don't know what that means, is the fear, what is it? Fear of missing out, right? So there's a lot of that in the market, and it's specifically with near-term trading, Alan. Let me tell you, from a guy who's been doing this for a while, man, that's your biggest enemy, your single biggest enemy. Near-term trading is one of those things where it's very easy to start letting emotion filter in. Guys can sit there and plan their, longer-term position trades, and they only got to make that decision, once a week, once a month when they're trading. We're constantly making decisions, right? So we don't have that luxury. And because of that, price action will tend to filter in and make emotion part of your trading, which is your biggest enemy, Alan. You got to stay as objective as you can. Certainly you come to these webinars and you see I open the charts and I have all these setups across the board, right? There's no way in hell I'm trading anywhere near all of these guys. Alan, to answer your question, basically, I'm just going to answer your question bluntly. Yes, I do have more than one or two scalps going at the same time. But, let me take a step back. I limit that to typically at most 3. And that's if they're all cherry-picked scalps and they're all ready to go and primed. You jump into the position and jump in. But if you're finding yourself falling into that mentality where you're seeing 6 or 7 trades going off all at the same time, and you want to start buying here and selling here and buying here, you're going to sell yourself short, Alan, and you're going to make a big mess of things. Just my humble opinion. If you can do that and be successful, more power to you, man. That's awesome. But for me personally, I have setups across the board. Which one of these I will operate on is purely based on the merits of that own setup. That's it. So, I'll have the 5-minute chart up with, you'll see that my 5-minute charts never have more than, 4 or 5, 6, 7, 8 trades on it, right? Or even 5-minute charts that are open, period. The 30-minute, I want to keep track of all these setups. I want to know when these trades are coming into areas or regions of which the scalp is going to be ideal. But 1, 2, 3 scalps at most for me typically throughout the day is what I'll be looking at. That's pairs now, Alan, right? Not actual trades. I can end up days where I have 15 trades in. I can end up days where I have 0 trades in. But when we're actually talking about which pairs we're operating on, I would limit it to 1 or 2 if you're just getting started, Alan. Once you're comfortable, man, if you can press 3 or 4, great. Remember, all that really matters is the entry. Once we get into the trade, we've timed the entry properly, and we have our limits, and we have our stops, then it's just finessing the exits. So, Alan, I hope that offers some clarity, man. But I would just caution you on getting too excited on getting involved in too many trades all at the same time. One other thing you want to keep in mind, Alan, and I'm sorry I'm taking so much time on this question, guys, but I think it's very relevant, is you want to make sure that when you're looking at these setups, you're not stacking up all your trades in one basket. Okay, so I don't want to be long dollar CAD, or let's say short dollar CAD, long sterling, long euro, short dollar yen, and then all of a sudden the dollar reverses, and now I have 4 scalps that are moving against me, right? So even if the setups are all there and they're kind of stacked up, I will very rarely stack up my trades all in one base currency. I don't care if it's the dollar, the euro, the Aussie, the sterling, it doesn't matter. I don't want to be excessively long in my portfolio any one currency, because if that goes against me, I'm looking at 4 or 5 wrong trades now. So one other thing to keep in mind on that premise, Alan. But broadly speaking, you want to take every trade on its own merits. So Eileen says, second that about the short-term thinking missing out. Not alone on that, Alan, says Eileen. So you're not alone in the room, my man. Alan says, thanks, man. No problem. My pleasure, Alan. Always good to see you in the room, as always. But a good question nonetheless. So, Mark, I almost forgot your question from earlier in the session. Let me know exactly what you mean by that question. So Mark had a question that says, when you get a chance, how close to a price break in terms of bars does an RSI trigger have to be for it to be operative, before or after? I'm not sure I understand the question, Mark. Can you give me some more flavor on that? Are you talking about when you're actually initiating the trade, or how far through the break of the RSI trigger you're looking for? So we talked about this yesterday, and for those of you who are newer to the webinar, if you missed yesterday, we went over a lot of RSI triggers and sort of the mentality and rule thinking behind it. But the one thing that I wanted to note was a lot of the times, we're not taking the position on the actual break. Bring your attention to that sterling long that we talked about yesterday. Where the initial break, 7.6, I think it was right here, the initial break, we didn't take in momentum. We waited for the pullback and then the tag to jump in. And that's how you want to get most of these scalps underway. Unless you're there and you have an ideal position against support to go long or against resistance to go short, these are there for validation of trend, shift in momentum, etc. It's not always going to be on the actual break that you click the button. If you miss that, or if you don't have the ideal risk to reward, you have to wait for that pullback to get back in. So Mark, again, if you can give me a little bit more color on the specific question you have. I'm not sure if I'm addressing it or not. Kyle wants to look at dollar mex. Kyle, I don't really look at the exotics. I know that the Swing Trades has one of those on right now, and Jamie loves dollar mex, but It's not something I really follow. I might have a chart up, but I'm not sure if it's updated. Let's check it out. Dollar peso, where are you? Yeah, so I can't even say that I have a chart that I've been following, actually. An RSI trigger to confirm price after the price break. Can an RSI trigger confirm price after the price break? Absolutely. Absolutely. And Mark, that's actually what I use the 5-minute charts for, man. So when I publish the research on Daily FX and on SB, when you're looking at the actual 30-minute chart, this trigger's there broadly for validation and broadly for bias. I'm 90% of the time I'm in before the 30-minute trigger hits. Right? I use the 5-minute trigger to jump into the position. Then I'll watch the 30, and if the 30-minute breaks too, great. That's all the more validation. I just want to say one thing, Mark, with that question that you just asked. It's very important that we don't confuse the two, right? Can RSI trigger confirm a price after the price break? Yes. Can an RSI break before price confirm a trade? No. So if a trigger gives out and you don't see anything in price, that's nothing, right? It's always price that we're looking at, and then we're seeing if the trigger is confirming what we're seeing on the price chart. He says, can you say the same thing on the 5-minute? Yeah, you can say the same thing on a 5-minute. Guys, again, I want to make it very clear here. Triggers are there as a tool. They're not a necessity for every trade. It's not predicated on the trigger. The trigger is there for an added tool. So sure, Mark, a lot of the times if the trade is coming into a major area of resistance, you have a trade like this, for example. Again, I wouldn't have taken this per se, but momentum coming into 60. Now, let's say this momentum coming into 60 was from oversold conditions and you had some divergence and you had a pending trigger break. Sure, a risk to reward with 15, 10 pips, 60 holding with divergence. I'll take that trade and I'll wait for the trigger break. If the trigger breaks, awesome. I can, tap myself on the shoulder and move on. If the trigger doesn't break and rebounds, well, at that point, maybe if we're in the money, we'll bring the stop to break even and just let it break even if it does break higher. Does that make sense, Mark? I don't want to make it a predicate that you have to see the trigger break in order to jump into the position, because a lot of times you can get a little bit more of an ideal position by just using common sense, resistance, divergence, and risk to reward. The trigger is always going to be the added help to go ahead and verify the trade. Mark says, that's very helpful. Thanks. Awesome, Mark. I'm glad that helps. So Kyle, again, I could bring up a dollar MEX chart and start from scratch for you, but my man, I think you're better off with Jamie on that. Don't forget, don't go anywhere. At 1 p.m. Eastern, Jamie's going to be on board with his midweek strategy webinar to go over some of the setups he's been following and what we'll be looking for heading into next week. So again, that's at 1 p.m. Eastern today. And then we will pick things up back in the webinars on Tuesday next week at 8:30 Eastern for another webinar. Don't forget, guys, Monday's the public webinar on Daily FX that's open to the public at 8:30. It tends to be a little bit more of a setup type webinar for what we're looking for the week. Remember, we like to use the weekly opening ranges on a lot of our setups. So I encourage you guys to attend that if you have time on Monday, and I will see you back here on Tuesday at 8:30. Best of luck trading, guys. Have a great weekend, and I'll see you next week. Cheers.